Welcome back to the Independent Investor Channel. This is going to be 5 minutes of financial fury in response to the current market correction that we're going through right now. Completely normal, but certainly we're identifying some comments that are coming through the group that are somewhat troubling. All right. There's some guys that are throwing in the towel. All right. There's some new investors that have got involved in the stock market, and I can tell right away from the very first sentence that they're nervous, okay? And there is just a learning curve that is attached with going through these corrections. And the difference between me and a lot of other investors is I've gone through this before, all right? A lot of people got really, really complacent in the last 8 or 9 years of uptrend in the stock market, all right? It is a learned evolution, okay? It really is. Being an investor is a learned evolution. And that's why if you go back through my catalog and you pick out one video and you get excited about self-directed investing and you have $500 to invest and you just go jump into the stock market, you have really missed the point of layering up, posturing up, entering into the stock market with you have to have the mentality that you're going to war. You really do. And I've said it in my catalog many times that the stock market will humble you to your knees. And it's a rude awakening for a lot of people that are stepping into the stock market new. But if you are, I'm there with you, all right? I'm there with you. And here's the support piece that I'm going to tell you. When I talk all the time about taking your hard-earned dollars and putting every single hard-earned dollar that you can away into the stock market, you are in fact earmarking those dollars for investment purposes only. Investment purposes only. I've heard comments. What's going to happen when the interest rate goes up? To me, that's a sign that the economy in and of itself is improving, okay? And a lot of people are like, okay, when interest rates go up, historically, it's affected the stock market negatively. Yes, when they're raised too quickly, all right? And that's just a problem of the Federal Reserve raising the interest rates too fast, and that happens, okay? Markets will correct to reflect the current situation, all right? I've had a few folks say that it's just got too hot, too fast. They've pulled out of the market. If I had pulled out this week, I would have missed out on a $2,000 upswing, all right? It's just when the stock market does this, the best thing to do is do nothing. But here's the thing. If you're looking at the stock market with the perspective of a 2-week time frame, you guys are really, really missing the point, all right? There is one way and one way only that is going to be correct for you over the long term, and that is long-term investing. Long-term investing, all right? And this is why I talk about the importance of having enough cash on the side. I don't care if it's $500 that you have to your name. Take half of it and invest it. Take that $250 and put it aside. Take that $250 and go ahead and invest it. And do not mix the two ever, ever. The $250 that you have earmarked is earmarked for investment to appreciate and depreciate over time. But this $250 over here, this is going to be your sleep easy money. This is going to be the money that you have that's going to be static. It's going to be money that you have for a rainy day. It could be money that you dip into in case you have these potential corrections to add to, right? And then make sure that you backfill over here this savings piece, all right? But I have way, way too many people just automatically throwing in the towel, and you go through this, self-deprecating type of mentality to where, you're coming into the stock market as a new investor and you didn't expect that the market was going to go down. You have to have more of a long-term passive approach. And these corrections, they have happened in the past. They will come and go just like this one will. Where the bottom is, I don't know. I don't forecast where I think the stock market is going to go on the Independent Investor Channel. I just don't do that. But what you have to do is you have to put yourself into a position to react to either direction that the stock market is going to go. Because here's one thing for certain. The stock market is either going to go up or it's going to go down. All right? It's going to be one of those two. And the question is how prepared you are to deal with both of those scenarios. Guys, thanks again for tuning into this quick shot financial 5 minutes in response to the market correction. We were approaching 15% of correction, backed off to about 12%. That is right in line with with the previous, I believe, 270 corrections that we've had of 10% or more historically in the stock market. They have come and gone, and really every single one of those opportunities provided a buying entry point for you guys to actually enter the stock market with more investment capital. Thanks again. If this is your first time tuning in, subscribe to the channel, and again, share it with anybody out there that you know needs to hear this information that may have taken this roller coaster ride over the last 2 weeks in the stock market with me and everybody else who had any type of investment dollars. Certainly have seen those investment dollars depreciate in value over the last couple weeks. Guys, stay long the program, stay disciplined. These are some of the core fundamentals that it takes to be a successful investor in the stock market, guys, and it is a learned evolution. Allow these opportunities to come and allow them to settle out, because you will come out of them stronger than you were before. Again, thanks a lot, guys, for tuning in, and good luck in your investment future.